Welcome everyone to Vested Interest. This is Shane back again for a weekly portfolio update. We do these every Sunday morning at 7:30 a.m. We did add $1,893 to the portfolio, but before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. On this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both the dollar cost average approach, investing weekly into the portfolio, and I suggest that's what you should do as well, whatever that timeline is, whether it's weekly, bi-weekly, once a month, once a quarter, once a year, whenever you get your tax returns, whatever that is, just be consistent, dollar cost average into your portfolio as well. I cover all of my investments in the portfolio. I do not have a paid Patreon account or some other site that I send you to go to sign up for courses or sign up for whatever I see. It's all out in the open. I want to be as transparent as possible so you can see a real portfolio built out over time. We all have enough to pay for, so again, it's free to see what I'm investing in. But if you would like to help out the channel, if you would take a moment to hit the thumbs up button down below, make sure you subscribe to the channel, join us on this journey to financial freedom, join the vested interest community. Make sure you hit that notification bell so you're notified whenever we put out any new content, and drop a comment down below. Let me know how your portfolio is doing. What have you been adding? Are you doing any options? Were you paid any dividends over the last week? Really love to hear from you, and that's what it's about. I like the interaction. I do answer the comments down in the comment section myself. I try to answer as many as I can on the day I post the video. So again, go ahead and do all that. It really does help me out. Hit that thumbs up. Make sure you're subscribed. Hit that notification bell and drop me a comment down below. Now let's jump into the video. And we're going to start out with options. Unfortunately, no options this week. Another one of those weeks where I wasn't being as conservative as last week, where I got into some options that were pretty low. None of them hit this week, so it is what it is. No options for this week. We'll give it a go again here. We'll probably actually try to get into some options today on Sunday and set up those plays for Monday morning and see what hits. Now, the dividends did roll in this week. We didn't get options, but we definitely got a lot of dividends, and they rolled in all on May 1st. We had dividends paid out by AT&T, ticker T, out of the communication sector. They paid us $102.81. And we have the drip set on in this portfolio. So that just means whenever a company like AT&T in this case pays out dividends, the $102.81, they go right back in and pick up more shares of that same company. So that $102.81 picked up 6.10915 more shares of AT&T, and you are really seeing the portfolio work now, right? These are shares I already own of AT&T, paying out dividends, those dividends buying more shares. And anytime a position starts buying, 6, 7, 8, 9, 10 shares, whenever it's paying out dividends, that's really going to help that dividend snowball, right? We also received dividends from Verizon Communications, ticker VZ, also out of the communications sector, paid us $218.31, went back in and picked up 5.55698 more shares of Verizon. Medical Properties Trust paid us out $160.98. That's ticker MPW. This is a REIT out of the real estate sector. That $160.98 picked up 34.32483 shares. And Medical Properties usually pays in April, so I was surprised to see it show up on the first here. Usually it's one of the companies that pays out in April, so I'm not sure if this will maintain its payout in May, but we'll see. So, but 34.32483 more shares. And again, you can really see that dividend snowball in effect here, picking up over 30 shares just from the dividends here. And last but certainly not least, CVS paid us out $97.94, and CVS is out of the healthcare sector. And that $97.94 picked up 1.7629 more shares. All total, we received $580.04 in dividends. And that $580.04 in dividends and the new shares that it purchased added an additional $42.15 in passive income. And this, if you followed the channel for a while, there's weeks that our new income that we add to the portfolio, $1,400, $1,500 a week, buying new shares adds up to about $40, $50, maybe $60 of passive income. So now the dividends are going to work, and it's like adding an additional week here of capital to the portfolio. But again, these are all positions already bought, already in the portfolio, and the portfolio just compounding on itself. That's really what the dividend snowball is about. And now we get into the first new capital into the portfolio for the week. We added $250.60 to the portfolio. It actually was on April 29th and April 30th, but I'm going to talk through this a little bit so you can understand exactly what we did here. First of all, we added two more shares to our Medical Properties Trust, ticker MPW. They paid us out some dividends, so we went ahead and bought a couple more shares as well. We picked up those shares at $4.65. We added two shares to our Comcast Corp position, ticker CMCSA. This is out of the communication sector. And again, MPW is a REIT out of real estate sector. Two more shares at $38.15. We're going to continue adding here and build out this position a little bit. It's pulled back under my cost basis. It's one that I recently added. We are over 100 shares, but I would love to get this to about 200 shares, maybe even 220, 240, somewhere in there. So we're going to continue to add here, especially while it's under our cost basis. And here, this is the one I really wanted to talk through. Now, if you recall, if you've been following the channel, last week we ran a options play, a covered call on Alibaba. That position was called away at $74, $74 strike price. Might have been $74.50. I'd have to go back and look. 74 or $74.50 strike price. So we wanted to add these back in. I want to add the BABA position, but I actually thought it was going to run up. So I went in on Monday and I went ahead and bought the 100 shares back and added it to the portfolio. I'm actually really glad I did, because by the end of this week, this was $81 or $82 per share. So it was the right play. I was going to go ahead and run the wheel on it. But again, the way it ran up last week, I thought it might be, breaking out a little bit. So we went ahead and added it back in. But we also, and I know the 76 plus 9 doesn't add to 250. So that's the additional funds, right? We had to throw in a little bit of extra cash to pick up the 100 shares. I could have just picked up 98 shares and foregone and just used the money from that covered call. But I went ahead and bought back the two additional shares there. So it was 7,565. So I think it was at 74. We had 7,400 in cash from that covered call last week. So we had to add $165. So that's part of that $250.60. Again, I want to be as transparent as possible in this portfolio. So whenever I do that, whenever I have a position, a covered call called away, and I just go ahead and rebuy the shares, I'm going to show it that way so you see it. Even if I have to throw in additional capital. Now, ideally, it would have dropped back down below the 7,400 and we'd have been able to pick it up a little cheaper. That's just not how it worked out this time. But these new shares of MPW and the new shares of Comcast added an additional $3.68 in passive income. I did not count the 100 shares of BABA because these are already accounted for in the portfolio. Now, our biggest investment day, we added $1,643.12 on May 1st. And with those funds, we had a lot of purchases here. So bear with me as we run through these. We added 5 shares of Valet, ticker VALE. We picked up those shares at $12.19. And Valet is out of the material sector. This is a mining company here out of Brazil. We picked up 2 more shares of CVS, ticker CVS. Is out of the healthcare sector. We picked up those shares at $55.11. This one really dropped down, so we're going to be adding to this one here. It's well below my cost basis right now, so we'll probably add at least 2 shares a week here going forward until it is not under my cost basis or until I build out this position to where I want it to be. I'm not going to go crazy on this one, but I wouldn't mind getting it to about 200 shares. I think I'm about 150 shares now, so I wouldn't mind running this to 200 shares while it's so low here. Now, the next 2 are our weekly buys. We're going to be buying these regardless of what the market is, whether they're up, whether they're down. We're just going to add to this position 1 share of the Schwab Strategic Dividend ETF here, ticker SCHD. Picked up that 1 share at $76.91. 1 share of the Vanguard Total Stock Market ETF, ticker VTI. And this is exactly what it says. It's all the stocks in the United States stock market. We picked up that 1 share at $248.41. We picked up 2 shares of Enbridge, ticker ENB. This is out of the energy sector, $35.47 per share here. We picked up 4 more shares of our HP Inc. position, ticker HPQ, another one that's down below my cost basis. Wouldn't mind building this one out a little bit more. There's a lot of positions right now that I really want to add to. It's one of those times where I may, look to add a little bit additional funds if they stay pulled back, but I'm not going to get real aggressive because I think we might be in for more of a pullback, especially as they make some decisions around whether or not they're going to raise rates. Right now, the Fed has said they're not going to raise rates. They left it alone for this quarter, but we'll see what goes on going forward. But four more shares of ticker HPQ, this is out of the information technology sector at $27.99. Added four shares to our realty income position, ticker O. This is the monthly paying REIT here out of the real estate sector. Picked up those four shares at $53.62. And last but certainly not least, another one that really dropped back here, Starbucks Corporation, ticker SBUX. We picked up 10 more shares at $74.93. And if you remember, we started buying these whenever it dropped under 85. Then it ran back up to 88. We've only been adding to it for a couple weeks. Huge drop after earnings down to 74. I think it even got down as low as 73 or 72. So this one we're going to be building out. We were just starting to build out this position. They hit a bad quarter of earnings, so they have really pulled back. And another one I'm going to build to at least 100 shares and then maybe back off a little bit and see what happens with it. They may be having some issues if our economy is starting to slow down, which we are starting to see some weakness in the economy, which is what we need to see. We need inflation to really come down and steady out around that 2% range. So I know some people are starting to freak out because the jobs report was not as good as typical, even though we added 175,000 more jobs. It's actually good. The rates being raised is doing what it was supposed to do. It's supposed to cool the economy down, cool down the hiring, cool down the inflation, and get us back to a more normal inflationary rate around 2%, which we're just above that now in the 3% range. But the Fed really wants us in that 2% range. So those rates being high, elevated for longer, is doing what it's supposed to. I know it impacts a lot of people who might be going out to get new home loans or new car loans. And hopefully people that are watching this channel, you're not using your credit cards unless you can pay off your credit card bill at the end of the month. I'm not going to get into the preachy video here too much, but if you are using credit cards, that's how you should be using them. Use the credit card, buy the things that you need, whether it's groceries, gas. That's what typically my wife and I use it for. Don't be using it to go out to dinners and stuff like that. Again, unless you can pay it off at the end of the month, every month, and have a zero balance so you're not paying interest. That's how you use credit cards, or for emergencies, right? I need new tires. My car broke down. I need to get it fixed. But same thing. You should be paying it off at the end of the month or as quickly as possible so you're not paying that outrageous 18, 19, 20% interest on a credit card, right? Passive income added from the $1,643.12, and all the new shares it picked up, $62.60. Very nice addition there. Total invested for the week, $1,893.72. And with the money that I invested, plus all the dividends that were paid out this week, $108.43 added. I think that's one of the highest weekly additions in passive income I've seen in quite a while. I know there's some weeks where, I might add a significant amount to the portfolio, like whenever I picked up the AWK positions and added like 10,000 in 1 week. It was higher than that, but I mean, just for a regular week of investing plus dividends paid out, that's a very high amount of passive income added, $108.43. I think that's right around a little over $9 a month in passive income, added in 1 week. So very, very nice to see. Now let's run through the sector weights real quick. A quick update on the sector weights here where they sit. Communications sitting at 9.77%. Consumer discretionary at 5.55%. Consumer staples sits at 10.44% of the portfolio. Energy makes up 5.91%. Financials at 6.22%. Healthcare has dropped down a little bit with that big drop in CVS. Johnson & Johnson's down. Pfizer is still down a little bit. Healthcare has dropped a little bit. It used to be about 15% of the portfolio. It's down to 13.63%. Industrials at 7.04%. Technology makes up 6.73% of the portfolio. Materials at 10.86%. Utilities at 10.12% of the portfolio. REITs and real estate makes up 11.28%. And here, this little sliver, 2.47% of the portfolio, are the ETFs. Excuse me. Sorry about that. Now over here on the right, you can see those same sector weights, the position or the percentages here, just like we went through the pie, but also the dollar amount associated with each sector as well, plus the total here at the bottom. Now here it is. A lot of you like to see this, and I'm going to show it every week. Hopefully, it gives some of you out there a little bit of confidence to see, confidence and encouragement to start your own portfolio. For those of you out there who may not have started your own portfolio, to see a real portfolio built out over time, week over week, month over month, quarter over quarter, year over year. I'm going to show you my portfolio as I build it out, just for that, to help some of you out see a real portfolio. I know a lot of channels out there, right? They hide them behind paywalls and stuff like that, but I want to be as transparent as possible so you can see what it looks like, the ups and downs associated with the portfolio. Sometimes you're going to be up, sometimes you're going to be down. Some positions are going to be up, some positions are going to be down. That's the market, right? When I see these red, all this red, those are all buying opportunities. And each week, some positions go red, some positions go green, some positions go red, some positions go green. That's the ups and downs of the market, right? If you look at a position, any one position, you're going to see a 52-week high and a 52-week low. And sometimes throughout the year, they'll touch that 52-week low or that 52-week high multiple times. Your job as an investor is to be buying whenever those positions are presenting opportunities, right? Whenever they're touching those 52-week lows or setting new 52-week lows, you want to be buying, adding to those positions. Whenever they start running up, you want to back off a little bit. So I'll give you an example. Right now, I'm not really adding to Owens Corning, right? We're up 89.29%. I want to add to that position. I like that position, but it's just up so much. It's way above what I'm willing to pay for it, so I'm not adding. But then you can see some of these green or the red positions here. CVS, for example, really dropped off this week. You know, if I was buying it and comfortable buying it back in the 70s, unless something's changed with the business, which I don't believe it has, I should be willing to buy it in the $55 range, right? It's on sale. Now it's 20% cheaper than what it was, so I can decrease my cost basis here, increase my yield, and increase my potential future return. That's the idea. So that's why I show this portfolio update every week like this. These are all the positions in the portfolio right here in this column, total shares I own in this column, current price as of the close of business on Friday here, market values as of the close of business on Friday. This is my average cost per share right here in this column, my purchase price, so how much I have into the position, my total returns, again, whether I'm up or down, I'm going to show it. You can see the red, that means I'm down. If it's black here, that means I'm up. Same thing here, percent, up or down. So if it's in the green, and the greener it is, the more I'm up. If it's in the red, that means I'm down. What sector each position falls in, whether it's a quarterly, monthly, semi-annual payer here, current dividend yield as of the close of business, my yield on cost, right? Portfolio weighting here. So on the previous slide, we saw the sector weights. Now we see each individual position's weighting. Estimated annual income here, payout months here, dividend growth year over year here. So I update this as they update, and where it sits at 15% at 52-week low. So let me talk through this real quick. We'll use BABA as an example. BABA really ran up this last week, right? Our cost basis is $75.44. It's currently at $81.33, so it's above my cost basis. It's also above where it sits at 15% of its 52-week low. So the $76.62 is where I want to keep this average cost price below that number. So right now it's just below it at $75.44. So I couldn't add a whole lot of BABA unless it pulled back again without driving this average cost per share above where it sits at 15% of its 52-week low. I might be able to add a couple shares, but that kind of gives me this column here, this 15% of its 52-week low, gives me a high mark of where I want my average cost per share to fall. Obviously, I want it lower the possible, but I don't want to go much higher than that, right? So that's what I use that for. Now, I also want to talk through a couple. You see these highlighted in yellow. So not only this week, because you're going to see a big discrepancy here, right? $10,726.56 is where we sit at passive income, and that is up, and it is way up, even above the $108 we received in passive income from the new positions we added, plus the dividends paid out this week. And part of that is several companies announced dividend raises. So we had, let's go through them real quick. AWK raised its dividend up from about 70 cents to 76 cents, right? So that was a raise. So now that's highlighted yellow. We had SYY, Cisco here, raised up its dividend. It was a small dividend raise, up from 50 cents to 51 cents. And I thought we had one more raise here. AWK, SYY, And was it Nutrien? No, it wasn't. Oh, it was HVT right here. HVT was the other one. They raised up their dividend from, I believe it was 29 cents to 32 cents. So we had AWK, we had HVT, and we had SYY. All had dividend raises this week. So not only did we get dividends paid out, not only did we add to the portfolio, but we had several positions in the portfolio increase their dividends as well. And all of that adds to that snowball effect, right? It adds additional passive income over the calendar year. So total shares, I'm sitting on 6,542.471 shares. Market value of the portfolio, $245,092.65. I've put $237,714.09 into the portfolio. We are up $7,378.56 or 3.1%. Again, I don't focus on this whether I'm up or down. If you've been watching this channel for a while, I've been down 4, 5, 6%. I've been up 6, 7, 8%, down 2%, down 1%, up 3% right now. The market goes up and down. Portfolios are going to go up and down. They're going to fluctuate, and you can drive yourself crazy by focusing on this amount right here. And that's not the type of investing I'm doing. I'm focused on this over here. That's why it's circled in red. The current yield of the portfolio, 4.377%. My yield on cost is 4.512%. And that's why it's circled in red, is what it's all about. This is what I focus on from week to week, month to month, quarter to quarter, year to year, whether the market's up, whether the market's down, whether the market's floating sideways. The passive income provided by all the positions in the portfolio continues to grow as I add new capital. As the positions increase, like we saw 3 different companies increase their dividends this week, and as the positions in the portfolio pay out dividends and buy more shares, this goes up, and it currently sits at $10,726.56. I think we are going to be, by the end of May, very close to being at $11,000 in passive income. And this week really, really supercharged with the dividends paid out, plus the raises. The companies that raised their dividends really supercharged the dividends. It went from, I think, around 10,500 last week to over 10,700 this week. Very, very nice to see. And the dividend growth year over year right now is 5.86%. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And doing that really does help out a small YouTube channel like mine. Again, hitting that thumbs up, hitting the subscribe button, make sure your notification bell is turned on. Share with anyone you think that might find value in it. Are they investors that you know or dividend growth investors? Go ahead and share the videos as well. Doing all that, again, really does help out a small YouTube channel like mine. It helps to spread the videos with the YouTube algorithm and get the word out. Dividend growth investing, in my opinion, is the best way to eventually get to financial freedom. It is not a get-rich-quick scheme. It is a get-rich-slowly. But unlike a lot of the get-rich-quick schemes out there, I can almost guarantee if you stick with it, if you consistently invest over a 20, 30-year working lifetime, you are going to be much better off than 90+% of the people out there, and eventually be able to replace your income and retire and live off those dividends, pay your bills, do what you want to do, go on vacations, whatever that future retirement looks like. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So I do a stock pick of the day video series Monday through Thursday. So if you have a company that you'd like me to cover in that series, go ahead and drop it down below, or let me know how your portfolio did this week, what dividends you were paid out. Did you get into any options? Let me know how your options are going. Mine are not going this as well this year with the market up and down the way it's been. I seem like I'm betting for it to go lower whenever it's going higher, and I'm betting for it to go higher whenever it goes lower. So I'm trying to get my options squared away, but it is what it is. Hopefully you are doing a little better on yours. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money to never invest any amount of comfort losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel certified financial advisor.